Even if the growth target is set to be still at about 5.0% and changed from this year, the most important thing to watch out for next year and where the growth may potentially, land at the end of the year will probably depend on two things. Number one, I think that depends on, how big is the tariff shock from an external perspective, and number two, how large is the policy stimulus. So far, we have heard from the Politburo meeting that they reconfirmed their policy stance change towards further easing. They used unprecedented countercyclical policy adjustment. They changed the monetary policy stance towards modestly easing. So they have done all of these by sending out this message, but we still need to wait and watch how much is the external shock and how much, in reality, the quantitative deliverables there will be from a policy stimulus perspective.
But, there's been a lot of debate about this dry powder and how much they actually have up their sleeve. I mean, how much sort of policy offset do you think they're equipped with right now in order to sort of put up a shield and provide some immunity and a buffer against the incoming trade policy that they haven't done already?
Well, I think that the policymakers in China, starting from late September, has signaled very clearly that they would like to step up policy easing, and especially to address several issues. And in particular, we think what is on top of their mind is probably fiscal situation and local government side. And therefore, a lot of the efforts from Ministry of Finance has been diverted more towards debt swap, and to help with the liquidity situation for local governments. But other than that, we have seen relatively, I would say, modest level of easing so far. Because, yes, they mentioned we had some interest rate cut, some reserve requirement ratio cut, and potentially another one coming up. But we think that, generally speaking, the support for domestic demand in the very near future is still lacking, and we still see more room for further easing. For next year, we are expecting the tariff shock to be relatively modest. And however, growth, still would have to be largely supported by policy stimulus. So we are expecting a slight increase in fiscal deficit, a potential, further easing in monetary policy, and accumulatively by 30 basis points of a reserve, the 7-day reverse repo rate cut, and along with other type of measures. But with all that included, we think next year growth is probably still going to slow down a little bit, but in our baseline scenario, probably stabilize at 4.5%.